Hey traders, Charting Man Dan of the Chart Guys checking in on the markets as we head into CPI numbers tomorrow at 8:30 a.m. Eastern. If we see 6.4, 6.5%, we can anticipate a bearish reaction. Anything less than that, 6.2 or less, we can be looking bullish, generally speaking. But I care more about price action than what the numbers are, because I will show you that we had a bullish reaction on fundamentals during a previous top, and let's look at that now. So first things first, I'm open to both directions, as I keep saying. I don't have a bias right now. My bias is with the bulls, absolutely right now. Let's rephrase that. And the reason is the bears aren't proving anything to me. And I have a list of things that I need the bears to show me. All major sectors at the low of the day together. Increasing bear volume. Dollar daily uptrend confirmed. Apple lose daily EMA 12. All these things need to happen, and none of them are happening. So today we had an example where all major sectors hit the high of the day in the first 15, 20 minutes of trading, and the bulls kept complete control from them. So this is a new rule for me in the last year and a half of trading. And I go through in my history of trading and I add rules. All right, a couple years in, always use a stop loss on every trade. Couple more years in, don't trade earnings. They're a gamble. You're just gambling. You have no idea what the reaction is going to be. Last year I learned, don't trade the earnings reaction after hour. I had a perfect bounce trade on Netflix, and because there was so much volume coming in, Fidelity would not process my sell order. By the time it did process my sell order, it was a huge loss, probably 10 times worth what I was originally risking on that trade. So now I'm not going to trade earnings after hours ever again anymore. And so now I've got this rule where if you see all major sectors, QQQ, XLV, XLF, if they're hitting the high of the day at the same time or the low of the day at the same time, that for me means don't look in the opposite direction that day. Yes, there's going to be some times where you miss opportunities because it's not going to follow through. But in my observation over the last year, it's something like 85% of the time, if you stick to that rule, it's very worthwhile. So newer traders, write that rule down and utilize it. Do not trade counter to the momentum of when all major sectors hit the high or the low of the day together, and just only look in one direction. And even if that happens and you say, okay, I'm not trading bear, maybe you're not comfortable entering long, and so you miss the move up, but at least you're not constantly fighting the bears, because there were traders out there today that tried to short, stop out, tried to short, and just were fighting the trend all day. So one way to help from doing that is utilizing that simple rule. Give it a try. So SPY right now, SPY and QQQ are daily downtrends that have confirmed with zero follow through. And we know that when that happens, we zoom out and scout a flag on a longer term time frame. So the 2-day chart is a potential bull flag for the S&P 500 and the NASDAQ. There are no red flags on these charts at this point for the bulls. So if I'm a bear heading into CPI, I'm not comfortable. And the reason is the bears need help from CPI reaction. The bulls don't need the help. The bulls are just fine cruising along right now. And so one thing that I'm remembering is back here in December, we had a solid uptrend, a solid bounce. This was a bounce of almost 20%, 15% plus. We lost the daily uptrend right here. This was a reaction. I forget if it was CPI or FOMC. Doesn't matter to me what it was. It was a fundamental reaction for a big gap up. It was a bullish reaction. It was what the bulls wanted to see fundamentally, and that marked our top. And look at the volume. So I'm just keeping that in my mind to remember, even if it's CPI is what the bulls want to see and we gap up, it is possible that that marks a temporary top as well. Again, I am not going to be trying to nail the top. I am absolutely open to weekly consolidation. I know it's inevitable. SPY and QQQ with the daily stair step or the weekly stair step still underway. 7, 8 weeks in a row of a higher low every single week. I know weekly consolidation is inevitable, but I know we're in a bear frustration market, and that means we can see another higher high to keep those bears frustrated before that weekly consolidation happens. So I am not married to a direction at all. I'm going into CPI flat. I will trade the CPI reaction. If we gap up, I might try a top fish, looking for the temporary top. And I'll also be watching for the potential of an hourly higher low if we gap up. One possibility overnight is a 4-hour tightening range as we get ready for the CPI. If we were to, pull back a bit and look something like that. Another reason that the bulls are comfortable is, let's just say CPI was right now, we could have a 2% drop and still look for a higher low compared to the low of the end of last week. So essentially, SPY and QQQ need to drop over 2% from here to start weekly consolidation and to lose the weekly stair-step pattern, which again is another reason why the bears are the ones that are uncomfortable and the bears are the ones that need help. Maybe they get the help. We'll see. Tesla, weakness to start the morning, V-shaped bounce, and then just sideways, nothing else going on. The opportunity was in the first hour and a half of trading. And the bulls are attempting a daily higher low, holding EMA 12. We're still in a strong uptrend. Any name holding daily EMA 12 is strong. QQQ is doing it. We closed right on it on Friday, and now we're back above it. Tesla's holding daily EMA 12. Apple, again, Apple has to lose daily EMA 12. It's our most important stock in the market, and it is a bull flag on the daily time frame right now. We must break 149.22 if that's going to change, or the bulls will keep their complete control. So Apple is another thing that the bears need in their favor for things to shift, because if Apple just holds EMA 12 and heads to a higher high, then the broader market is likely to do the same. NVDA, another name holding daily EMA 12. So these names must lose daily EMA 12 for anything to shift, or the bulls keep their complete control. There are also a number of names that are going to be scouting daily lower highs. IWM, XBI, we'll look at those in just a moment. Google, bullish reaction to CPI. Google's looking for a daily lower high. Tons of space for it to form. Amazon's looking for a daily lower high. Bounce underway after today, but we can go up 10% and still be under the high of where we came from. I've said this a lot recently, but this is a very different market environment where in the past, 2016, 2017, I could watch SPY and know exactly what was going on across the market. Everything was so correlated. We were in grind up mode. If SPY's green, everything's green. Obviously not that literal, but you get the idea. And in this market environment, you've got Amazon and Google looking like this. You've got Microsoft and Apple looking completely different and much stronger. There's a lot more going on underneath the hood with these individual names. It's not the same very strict correlation and boring. It was boring back then. I mean, the bulls liked the boring because it was grind up boring, but there's a lot more going on with individual names right now. SMH confirmed a daily downtrend, but did not lose daily EMA 12. Same deal, weekly stair step. Bears must break the low of last week to continue into weekly consolidation. NVDA must fail the high and break the EMA 12 support to shift this momentum. XLV, bull break of the weekly stair step drop. 6 weeks in a row with a lower high every week. That is now broken. Is this the first sign of a monthly higher low forming? Maybe. We're trying to hold monthly EMA 12. We got a double top at all-time highs. Again, you show me this chart, and I'm absolutely open to the possibility that we see new all-time highs on healthcare. But what's most notable to me in the short term is the fact that our lead bear major sector is joining Team Bull the last 2 trading days. And so, again, if I'm on Team Bear, I'm saying, this was, the one sector that we had going for us out of the major sectors. That's no longer the case. The fact that we hit the highest level in over a week now. XLF is all bull still. We lost the daily uptrend last Friday with a gap down open, and the bulls did nothing but buy. And so we're back up testing this high. We would have to fail 37.11 and break 36.07 to confirm a daily downtrend for that to change. So the bears need XLF to change. They need XLV to resume weakness. They need Apple to change. They need the dollar to change. The bears need the change. The bulls don't. IWM, daily bounce underway. Again, we can see a daily lower high with even a bullish CPI reaction. Anything under 199.26, the bears then would have to confirm the daily downtrend to prove something to us. But IWM and XBI are on the list of names that will be scouting a daily lower high as a result of the next bounce. AI stocks, notable day for me. AI, number of reasons it's notable. Number one, bearish correlation was screaming all day. All bulls in the market, and AI was this week. Look at AI divided by QQQ. Well, it's the exact same chart. It's not showing what I thought it would. I thought it would show, essentially what AI has been doing is doing what the broader market is doing, but magnified. And so Thursday, the market was weak and AI was extremely weak. And Friday, the market tried to bounce and AI saw a little bit of a bounce. But today, AI was all bears while the broader market was all bulls. Look at the volume dropping off. If we return to where we came from, volume was 2 million shares a day, nothing going on. Then we hit 100 million, and now we're just fading back. And I watched it trade today, and the bid and the ask sat a penny different for tick, 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 trade, 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 not budging. Over the last few weeks, you're flying 10 cents up and down. And as a trader, I want that volatility. I want 5% moves in both directions easily to capitalize on those moves. And if this volatility and volume continues to shrink, I become much less interested. We will be scouting higher lows on the weekly time frame in this sector, but we're clearly seeing the hype fade and the momentum fade. And at this point, we're already down over 30% from the high. And if you look at the AI list, the names that correlate to the broader market, the big names like Baidu and Microsoft, they are up and green with the broader market. The small cap names, BBAI, still in a daily uptrend, but down 18%. SOUN, still in a daily uptrend, but down 17%. And AI, all leading the way down. These were all the lower cap names in strong daily charts a week ago. They're fading. The music has stopped in the AI sector for now. So again, we have to ensure that we trade the volatility while it's here, but we do not hold the bag and be a part of the 30 to 50% drawdown that comes when the music stops from a hype sector. So I'm going to be watching for perhaps an AI hourly lower high to be the result of the next bounce. There is still opportunity, and there will be volume spikes every now and again once things, tighten up and then the tightening range breaks. But I already know that after today's trading, I'm going to be trading AI way less in the next 2 weeks versus what I've traded it in the past 2 weeks. This volatility is going to shrink. Miners and metals are still weak, down near their lows. Both gold and silver broke the low of Friday. Daily downtrends are our guides. And these metals are now weaker than the dollar. The dollar was red today, and the metals and the miners, maybe not the miners, but the metals were red. Yeah, miners were red as well. So that's relative weakness. And if you're a bear on these names, you're saying, all right, we're positioned well, where if the dollar confirms a daily uptrend, these names will see further downside from here. Oil, I'm watching a rising wedge on the 4-hour time frame. I drew this morning, and we then bounced off of support and rejected from resistance, which validates to me you're on the right track. Watch this pattern. 78.45, key short-term support. If we were to see a bull move overnight, I may try for an hourly lower high tomorrow. Depends, but I do like this rising wedge, and I would be more interested in it if it were intraday on a shorter term time frame. We'll see if it shapes up. Natural gas still weak, testing the lows, daily lower highs remain. Bulls are attempting to build a base of support. I'm interested in the bulls when we break the daily lower high pattern. I am not interested if the daily lower highs remain intact. And right now, the lower highs are remaining intact. And if we break to a lower low, RSI levels have all cooled off, and we can definitely see another leg down. So I'm remaining very patient, but we are weak. 12 hours trying to form an equilibrium, but bulls have to defend support. So that's where we stand into CPI. And again, I'm open to a gap up open bullish reaction to CPI, marking a temporary top just like mid-December. But prove it to me, bears. Give me all major sectors at the low of the day together. Give me increasing volume. Give me Apple losing daily the uptrend, EMA 12. Give me the dollar confirming a daily uptrend for the first time in 4 months. There's a long list of what the bears need. There's a short list of what the bulls need. Prove it to me, bears. And we'll see you post CPI. Do good things. Thanks for watching. Thanks for the likes and the shares. Have a good Monday night. Was the Northeast. I believe I was going to a friend's wedding. I grew up in Massachusetts, and the foliage was about to be popping off. in New England, so heading back up for there and making my way along the coast as we go with some beautiful flowers. Thought this was a cool shot of the diversity. This was all in my campsite, all the different kinds of algae and moss and lichen and cool different colors, cool different shapes, orange, blues, purples, teals, greens, all breaking down wood. And one of my favorite facts is that trees were around before fungi, and I might be getting it wrong. It's either the bacteria that break down trees or the fungi that break down trees didn't exist when trees were thriving. And so trees would fall and die, and then they would just lay there, and nothing was breaking them down and turning them into soil. So certainly a different kind of world back then. This giant wasp took out a giant cicada right in front of my face as I was walking down the trail. I believe this is in Kentucky at this point. I like bugs. These are furnaces from the 1700s for metalworking. Just these big stone structures that allow the heat to get trapped, to get hot enough to be able to work with metals. So that was pretty cool. This is in, oh man, what is the name of this? Fort Fredericks. I should have checked beforehand, but Fort Frederickson, something along those lines. I think it's Virginia. I like the stuff from the 1800s. I grew up with my grandparents living in Gettysburg, Pennsylvania, the site of the famous Civil War battle, and I've been going there. I've been there 30, 40 times in my life or more. And so we got all that history, all the battlefield tours, the ghost walks, and all of that stuff. So it definitely still interests me. But a cool big old fort with big walls still around 250 years later or so. So this was just, I think it's a state park, and I was just around, hanging around there, and I did go back up through Pennsylvania, and this is the front page of the Gettysburg Times, I believe it's what it's called. Local farmer finds mutant ear of corn. The happy guy, there's his 15 minutes of fame, Ben Clunk. 3-headed ear of corn, front page of the newspaper. It's a simpler place. Then I hopped on the AT trail just for a couple nights. There's your shelter. And heading up now as the leaves were continually changing to the White Mountains of New Hampshire, my old stomping grounds. That's where my dad used to originally take us camping, and that's where I started to fall in love with nature. If you have children, take your children camping in a tent. RVs are cool, but take your children camping in a tent. It will probably change their life. And I'm 30 years old, and I can think back 25 to 20 years ago and how much of an impact that had on me and how it sparked my love for camping and how I then used that passion to road trip around the country and experience all these things because I was comfortable doing so, because I had an adult show me the way and show me how to do these things. And if I had never camped, it's probably, if you never camp and you're all of a sudden 30 years old, it's probably hard to get comfortable and to get into doing it consistently. Take your kids camping, even if it's in the backyard. It's an adventure. It's fun. You can bond and roast s'mores and have a fire. Teach your kid how to make a fire. All good stuff. That's the advice for today. We'll see you next time.